Weekly stock market update part 2. We're going to talk NASDAQ and everything else. Don't forget to follow. A lot of you watch the videos, but you're not followers, which means you might miss future ones. NASDAQ, where are we? Well, you can put it into some kind of context. It feels steep, but we've had this kind of move before many times. And I'm not saying it's going to have a V-shaped recovery. It might not. It might be more prolonged. Okay? I don't think, however, we're quite at this pace where it just goes down and becomes what's called a daddy bear. So at the moment, it's a mama bear because the monthly MACD is rising. A baby bear because the monthly MACD is rising. A mama bear would be where the monthly is falling, and a daddy is where it's falling from an overbought position across its own moving average, which isn't quite there yet. Okay, FTSE 100 seems to be trying to go up again. Let's see. The top 10 S&P 500 stocks over the past month are these companies. So let's see if we're missing anything. Should we have a look at them? Let's have a look at them. Mohawk Industries, that's a nice little big return, isn't it? Well, if you've got the monthly MACD rising like we have here and the weekly, you tend to get the biggest rallies. It's more for traders than it would be for investors because it isn't the 7, 8, or 9. So it wouldn't be one for my 12-month investment. But if you're more of a trader and willing to take the risk, and it is a risk, then you'd say, monthly and weekly rising, fine for you. Stanley Black & Decker, rising, should continue ahead. But it is shorter term, higher risk. It's not an investing one because it's not 7, 8, or 9. However, for those of you who are more risk loving and willing to time markets, that's for you. On your head be it. Also rising, this sort of flat, should hopefully rise. Bit more risk because it's not an investment, it's more a trade. And you'd exit as soon as the weekly, which is this one, went flat or started falling. So it is a short-term trade. It'll be something like this, and you might already have missed it. Okay, but it's not an investment. Also not an investment, even though it's a 7, 8, or 9, because that's overbought. And since it's overbought, I wouldn't even be looking to do a trade in it, other than perhaps a short. But I'm not looking at shorts or anything here. Okay, CBRE 7, rising. That could have more upside as a trade. Could it be a special situation investment for 12 months? Potentially. Looks a little bit risky in the sense that the broader market is falling, but it looks okay. Could be a special situation in my book. Not a 7, 8, or 9, so not one for investing, but may well for the traders and the higher risk takers amongst you. Could be one for you guys. Similarly for the traders, but it's overbought. Not really for me, but the traders might say, let's just go with the momentum. Remember, for the traders, they're really looking at momentum and looking to get in regardless of financials. The financials here don't meet, so it's not one for me. However, that's rising. It's had a bit of a breakout. So for the traders amongst you, the higher risk takers, the ones who are happy to spend the time and be wrong-footed, that might be all right for you. Not for me on either investing or trading because it's overbought there. Pool, flat, might be rising, might be going up. So for the traders, yes, but not for the investors because it's not 7, 8, or 9. Costco, well, I wouldn't want to short it at the moment. It might bounce off that. It's overbought, not one for me to buy at the moment. 7, 8, or 9. Apple. Now, this time, people saying, why don't you talk about Apple and all these? Well, I do. Look, it's here. But I've left it for my Great Investments program people. Otherwise, they get really annoyed while you speak to other people. So the people on the program will know exactly what my position with Apple is when I do the weekly broadcast tonight. Amazon, similarly, they'll know. And you can pretty much work it out because I've told you often enough on how to interpret all of this. And Microsoft. Okay, so those are the charts. 7. And you know how to read all that. But on the private program, I'll let people know my positions on those. So let's go back to the broader market update. Well, what can I say with this? I won't buy it at the moment because that's going sideways. The market's falling. And whilst this is rising, so there is more upside, I'd rather wait for the broader market to rise. Just give me a bit of comfort. Netflix, as I've already said, is overbought there and was likely to fall. Could it resume back up? Well, let's see what it's done in the past when that's happened. Like here, what did happen? It fell, stabilized, and then fell a lot. So I'd certainly say sell. Get the hell out of there now. Okay. Walmart 7, but I wouldn't buy it now because it's overbought. And the last time it looked like that was here, and it was just ugly. Okay. Berkshire Hathaway overbought. Not one for me. Eli Lilly, very much the characteristics of the quality 5+, but it's overbought and the market's falling. So I wouldn't certainly want to buy it now. If you did buy it now, please bear in mind you're likely to lose at least 18 to 20% because it's done it many times in the past, or even 25% instantly. Okay, always assume sod's law because that is overbought. Doesn't mean it won't keep going higher. Might do with the rest of the market. Up to you if you're willing to take that risk. Disney, well, that's flat, so just wait for the baby bear, I guess, to move. CVS, it's an 8. Won't buy it at the moment. If that comes around, this comes around, that might go up significantly. But at the moment, you're just holding on to it. Wouldn't be a special situation at the moment because I'd really want the MACD to cross above the moving average, which it hasn't. Block, just broader market update, sideways, so you're just waiting. There's a headwind at the moment in the broader market, so that's going to affect things. Ooh, 7. Both seem to be rising, so it's one of those which would work well for the traders and potentially a special situation for the investors. Unless the investors are more risk averse, then it's not right for them because it can do these kind of falls. And if you don't like those kind of falls where you can lose 27% in no time, then stay away from this one. If you're already in it, you'd be happily holding on. Okay, Columbus McKinnon, 7. Not quite as attractive as the last one, but sort of similar kind of proposition for it. Look, it does this, rises, does that. So if you're risk averse, you want to stay clear of this. Molina Health, it's now spiked up a bit more. Boom, might do that. Akamai, yeah. So let's see. Can the weekly continue? And can the monthly turn upwards? The monthly's not turned up yet. Okay. I think that's it for now. Please, as I said already, please like and follow as well for more and more updates to come. I'll try and post more on the Telegram channel. And if you've not seen it, then all my links are alpeshpatel.com/links. If you've not seen the Telegram channel, it's where I post the daily updates as well, quite frequently. And all my links are here, okay, including Telegram. You can get a free copy of my books, 2 of my books from here, 2 of my 18 books on there, and all the free tools. It's alpeshpatel.com/links. Oh, I said here, and then I didn't show you, did I? alpeshpatel.com/links. Let's go do that. There we go. Okay. alpeshpatel.com/links, and what you'll find on there are the books and the freebies and everything else. You can schedule a call, free investing course, completely free, free copy of my Investing Unplugged book, latest investing webinar, due diligence. One of the reasons why I'm really pleased I've done that free course is a hero of mine, in many ways, is Ray Dalio, the largest hedge fund manager in the world. And he's got a course, largest hedge fund manager of the world, Ray Dalio, founder of the world's largest hedge fund, masterclass, and he does a course there, but you got to pay for his. You don't even have to pay for mine, but then you might say, yeah, he's worth paying for, mate. You're not. It's entirely up to you. But yeah, he's pretty impressive. And mine's free. And so is my book. His book isn't free. He charges you for his book. I mean, think about it. Founder of the world's largest hedge fund, and he still charges you for his book and charges you for his course. I don't. So, okay, free investing course, and it is pretty bloody amazing, I have to say. Oops, there we go. And you can download the book from there. And it's got a ton of information and the 2024 updates and so on. I think you'll like it. Thank you all very much indeed.